Good morning, traders. This is Roger from Aitg, here to present to you another daily update for May 23rd, 2018. Um, I hope everyone is doing well out there, and I hope you guys are following this and learning. This whole process here is for your benefit, to give you ideas and help you out to be a better trader. All right, the first setup to look at this morning is going to be the 10 pip Renko breakout. And this is the new Renko setup that I started on the 20th, so 3 days ago. Right now there's all trades have closed. Remember, this is not baskets. Well, they are baskets, but we're going at profit. So it's closed 4 baskets for 239 pips. The account right now is up $239. So not a bad start. Seems to be the 10 pip wrinkles are a little more stable than those 20 pippers that I was using before. So we'll just continue to truck on and look for some more green pips here. Hopefully we'll get in some more trades. We've got a couple charts here, see if we got anything close to tripping a trade. I don't want to go through all the charts. It takes too much time, but we'll just randomly pick a few to see if we happen to come across one that's ready to trip. All right, looks like as soon as this candle decides to close short, it will open up a short trade here. Let's zoom out a little bit and see where we're at on the old chart. So yeah, we'll have to wait and see. Remember our take profit. We're only looking to take out 28 pips per trade, and I am using the jumping stop loss. Okay. All right. Give me a second here, and I'll set up for the next showing. All right. Here is the 4-hour heat map. This is the new setup. This is where we're taking 12 pips for each pair and $50 for each basket. It has taken 7 baskets so far for 686 pips, or $686. But presently, basket equity is down 406. It's the max equity drawdown so far. Worst it's been is 413. My margin level is still above my comfort zone. We'll look at some of these pairs here and see if we need to help them out a little bit with some either hedging or so additional positions to get them back to into profit. All right, the Aussie Swiss here looks like she's traveling back up, kind of in a 4-hour range here. Past remember these are weeks right here, so it's been ranging about 117 pip, 120 pip range for the past couple of weeks. So I think we'll leave that one alone. And remember, this started last Thursday, I believe. I have it written down in my notes somewhere. I'm not going to disrupt any of my figures here. So at the end of the week, when I shut down for the week, I will update this in the information box to reflect the 4-hour heat map, 12 pip take profit, and $50 equity take profit for the basket. And then also put the start date, which was last Thursday, and the starting balance, which was 28.11. Okay, we'll just look at a couple of these real extreme drawdown pairs and see what we got here. This one here, Aussie yen. I'll zoom out and give a 10,000 foot view look. Well, I think we're not quite sure yet. I think I'm going to draw a line in the sand here at this last low. Let me change this so it doesn't look like a stop loss line. And we'll go with, that's a pretty color there. Oh, okay. So that'll be our line in the sand. Keep an eye on this next couple of candles, and if price breaks down, I will take a hedge trade to lock this in, buy some time. If it continues to go up, if it breaks the Haas again, I just might, I guess the wise man would say let's let it run, but or I could help it out and put on a second long position. That will be determined here. All right, let's look at another extreme one. Swiss yen. All right, this one just Haas is getting ready to turn. It's like I hit some resistance up here and bounced off the resistance. It's going back south again. Now I can wait out. I mean, I'm already down 400 something pips. I have room right now to take some evasive action. I will wait till the next candle, which is at noon, 12 o'clock noon my time, Central Time here, and make a determination whether to take a hedge on this. All right, let's look at one more. Pound Swiss. I think this is just a pullback. Let's take our 10,000 foot view. Oh yeah. No worries here, mate. We'll just let this continue to pull back as much as it wants, and I think maybe once it starts heading back south again, I might help it out with a second position going south. So there's the new 4-hour heat map, just taking 12 pips each trade. I mean, look at how many it's already has closed. 148 shorts and 49 longs. So it's taking quite a few trades. Lots of profit there. We'll just tough it out, see what happens. All right. Next is the other 4-hour heat map. This is the original one that started back on April 27th. It has closed one basket. Cycle profit loss is 522 pips. Basket equity right now is down 249. What does that all mean? It means that we are in some extreme drawdown. We still have plenty of margin here. Nothing to panic. Again, we are with this setup, we're using the ADR take profit at 0.7, and we're peeling off profit as we go. That's why this cycle profit loss is built up so much. So when this again, our equity lock is at 70.50. And the setup here is we're taking two a day, two baskets a day. Of course, this is I think it's third day that we've been in this struggle here. Now I'm just going to continue to let this ride. I could go on and do some rescuing. If I do decide to go on rescuing, just I think one of our traders pointed out that we need to turn off the ADR here. Turn off all the profits, take profit individually, because the dashboard will interfere with hedging. So again, we have no charts open here, but if I decide to do hedging or some type of rescuing, again, I'll have to turn off my ADR take profit. But for right now, I'm just going to let it ride, see what it does throughout the rest of the day, and hopefully this thing will turn around. I mean, 236 pips, that's not nothing to come back from. No big deal. So, well, again, let it ride, and let me set up for the next viewing here. All right, here we have the once deemed old faithful here, the London 1-hour Haas breakout. one and done a day. And you can see we got the Red Sea going on here. Kind of looks like the Red Sea. I have sailed through there many a times during my naval career. Just is not long. Hopefully this doesn't get any longer. I know a lot of you guys are trading the London once and done, and probably have the charts looking like this. The one good thing is that we're only in 5 trades right now. We have plenty of margin space, and I have looked at some of these already, and you can see that some of these are coming back. I will go into a rescue mode here when this Haas turns and get confirmation on this this Haas turning blue. I will take a second position just to expedite getting above water level there. Let's see. We'll look at all 5 of these since there's only 5 to look at. Same thing with this one. So you know, London did a little bit of head fake on us a couple days ago, and wanted to go long and decided to pull back. So again, it's coming back. Let's go look at a 10,000-foot view there. Just in case, I'm going to draw my line in the sand down here. And if it decides not to continue to go back to my original position, and if it bounces off the Haas and comes back down, I will take a hedge on that position right there. Let's go back and look at the Aussie Swiss real quick. We'll put a line in the sand here too. And this is a position that we took last night. This little pullback, we'll see what happens here. Well, big pullback. And here's one just floating around a little bit, doing what it wants to do. Let's see what happens on this. Looks like we could get in profit here. All right. That was the Euro US. Next, finally, is the NAS US. Next and final. Look at that ranging going on, that consolidation. We'll have to wait and see. If it breaks, if the Haas changes and breaks, I'll hedge it. If it breaks south out of this consolidation, then obviously we leave it alone and let it take itself out. So I don't know what everyone else is trading their London as far as lot size compared to account size, but you should have, and using the 4-hour heat map again, that you should have few trades and lots of margin to trade out of this, get back to health here. So that's the 1-hour Haas London breakout, and next will be the 1-hour Haas breakout, one and done, using the 4-hour heat map. This one right here, basket equity right now is down $347 or 232 pips. Again, you have to take your dollar amount, divide by your lot size to get you how many pips this is. So we have some cycle profit loss. We have some positive money in the bank there. But we have 1, 2, 3, 4, 5, 6, 7 open trades and some drawdown. But we are looking good with the margin level. Let's look at a couple of these trades here. Look at this one here. Again, looks like it's coming back. Let me point something out. Reminder again, if you go into a rescue mode, I think I said this earlier on another setup review, is if you go into a rescue mode, if you're using the ADR take profit or stop, you got to turn all this stuff off, okay? And Let me just find one to set up here to give you an illustration. So you have to turn all that off on the dashboard, and then on the individual pairs, let me pause for a second and find a pair, a trade that is worthy right now of hedging or taking a second position here. This one's coming back to my entry, so let's look at the CAD Swiss. This is coming back, but let's look at the 10,000 foot view. See, it looks like it's topped out, and the overall big trend is turning and heading south. So that being said, we are 58 pips away from the last low. We'll put let me change that up a little bit, a line in the sand here. Now again, these are just lines you're putting in off the MT4 platform. You need to go back and check these. When you go into rescue mode, again, it's no longer hands off, it's hands on, and you need to be vigilant on top of this. Keep an eye on what's happening. So if price retracts all the way down, retraces all the way back down to my line in the sand, I will take the hedge on that guy. CAD yen. I think a lot of these are going to be in the same situation here. It's like a recent all-time high there. This could just be a retracement and could be continuing. We don't know yet on that one. It's definitely past the 618, but it is moving back up. So let's see what happens here. We'll again keep an eye on this. And we'll draw a line in the sand also. Let's see. I hope there's one we can illustrate. That one will do its thing. All right, the pound or euro US looks like it's in profit, and it looks like it's creating a new low. I think a wise man would say, since we are putting our hands on this and taking control, I think a wise man would say, let's take the money and run on this one. We'll close that trade out and bank those few pips in profit. That's what you call pruning right there. You can prune negative or you can prune positive. Obviously, it's better to prune positive. I hate negative. All right, this guy right here. Looks like we had some little consolidation here, kind of flat, and Haas is turning. It's already turned, and we'll see if this continues to go back into profit there. All right. Yeah, look at this consolidation right here. That's classic. So the guy's either going to break out north or he's going to break out south, and I'm hoping he breaks out south. All right. I want to illustrate to you guys. All right, maybe I can just do it. Let's pretend here that this horizontal line is a position, second position. I'll turn it green so y'all can visually imagine this being a second position going north. Okay, and what you want to do is when you go into a hedge mode or a second position to help you expedite getting out of the trade, You want to go into the Indy also. I said earlier you want to turn off your take profits, your stop losses on the dashboard. But you also want to go into the pair here itself, because we had the use stop loss pip lock, trailing stop loss, and you want to turn that to false. You want to turn that off also, because now we're going to manually control our take profits and our stop losses. Oh, that guy disappeared. We put him back. Okay, so there's our second entry, and we're banking on this thing continue to go north. Now, what you can do is you know how you create a take profit. This would be a broker take profit. This goes back to the broker, so it's not hidden. You just put your mouse over your entry price here. See, it says drag to modify. Just left click and pull up. And you look over here onto the right of the chart, upper left hand corner. It tells you how many pips the take profit is. 70 pips. Well, I can't be. That's 7 pips. And you let go. And there's your take profit, your manual take profit. You can do the same thing. You can create a stop loss by doing the same thing, dragging it and coming down below price. Remember, stop losses have to be below the price or below your entry or above, depending on if it's a short or a long. And left click, drag down, let go, and there's your stop loss. So I show you that to let you know that when you put the second position on, now you can break out your calculator and mark off how many pips you are away, and figure out how far you need to travel to a break-even point, and set your stop losses or your take profits at that point right here. So let's just say, for instance, that let's say that right here, this is our break-even point right here for both positions. So as this position continues to travel north, all right, it's helping eat up quicker that drawdown and getting you to profit. So let's say at this point right here, I'm just hypothetically saying, you guys really do the math to figure this out. But say this point right here is where this whole position, both positions are at a break even. So if you want to get out with a break even, leave it there. Or if you want to get out with a break even plus a few pips, a little profit, move it up, 10 pips or whatever. All right. So how do you do that? Let me just real quickly here explain how to find out where that point is. Well, right now we know that we're down. Let's see, 93 divided by 1.5. That's our lot size. So we're down 62 pips. So from price right here, of course I could have done this also, to here is 62 pips. All right. I put in the second position on at 1.5, $1.50 a pip. I would need, let's see here, to actually, let me step back once. Since we are using equal lot sizes here, logic will tell us that we just need to travel 50%. So 31 pips should get us to a break even. Now, plus or minus a few pips for spread and any commission that has been credited to this original position here. Now, if let's say that we were trading, this second position was $3 a pip. Well, now you only have to travel, let's see, 25% of the distance, so 15 pips, and that would give us our break even, our break even point. And the best thing to do is just to map this out on a piece of paper, find out how many pips you're away from your original position, and then figure out whatever your second position is as far as lot size, and crunch the numbers, do the math, and figure out where that break point is. All right. Let me erase all this because I'm not. This is just a simulation to show you. I hope that was clear. I hope I was not too wordy in my explanation there. All right, I think that does it all. Again, so right now we're just remember we have a few lines in the sand on a couple of these positions, and we will wait and see. Keep an eye on this. So I think the final setup is the daily heat map. The last one, update for the day. Now, as I showed yesterday, we got into put some couple extra positions on. Some of them have closed, and our max drawdown was 892 in dollars, and right now we're presently at 560, 570. So as you can see on the graph, it did come back. This again, the graph restarted because it went off the page here. It did come back to around somewhere in the 400, 450, and then went back down. Now it's coming back to me. We'll look at these trades real quick and see what we got. Margin, we still got a good margin here. Actually, I think the margin has increased since yesterday's report. Let's look at the Aussie CAD. We have a second position going back to the original, so 2 cells on. And you can see it. Here's a good demonstration here. I have my take profit, and for one position, my take profit for the other position. Now, the break-even point for these 2 positions is about 50%, like I said, somewhere in this neighborhood here. Again, since I am keeping an eye on this, they're hour charts. I will make a determination once I see this getting profit. Look at the chart. If it looks strong, the strong move continuing south, I'll just let it ride. If it doesn't look strong, if it looks like it's going into a consolidation period, I'll just close it at the break even plus a few pips. All right, so that one's looking okay. CAD Swiss. All right, here's one that's coming back. We're down 73 pips. I think I'm going to go ahead and put on a second. Let's look out. Let's zoom out a little bit first. Oh, you can see the long-term trend. It looks like it's peaked. We've got a lower high, another lower high. So trend reversal. It's heading south. Decisions. Well, decision one would be to draw a line in the sand here, take the hedge, and one thing with the hedge trading, all right, you could, if you take a hedge trade, an opposite position, which would be a hedge, and at the same lot size as your original position, you're not gaining any ground. What you're doing is just locking up margin, locking that trade up, buying time for the other positions to get in profit and overtake that. If you say right now this position is $1.50 a lot or a pip, let's say if the hedge position, if you feel real confident, again we'll zoom out, that this is a nice trend reversal and we have plenty of room to fall back, at least to here, to this support level right in here, all right, which is about 89 pips. If you feel real good about that, then what you can do is put on that hedge, but put on at $2 a pip, $2.50 a pip, or maybe $3 a pip, depending on how much margin you have and how sure you are of this truly being a reversal in trend. So at this point, I'm not quite sure. I'm going to give it a couple more hours and see what happens. If it continues to go north, again, this could be just let's go ahead and fib this out. Let's see if I have my fibs. No, I have my fib set up for, I modified my fibs for subdem trading, manual subdem trading. So that's not going to work. But the 618 somewhere around here. So I'll wait till the 618 right here, and in fact we'll put a line in the sand there at the approximate 618. If it breaks it, then I might put a second position on to help get out. If it continues to go south, again, if it breaks this line in the sand, I will put a hedge on. All right, enough of that one. Euro pound. There's my line in the sand. It's Haas's turned. I'll wait on this. Looks like it's it's a consolidation period right here. See what happens. We'll keep an eye on that one. And the pound NAS, this is the one that was giving us big problems here. There was a hedge position going in. It was a second buy, and let's see if we can show the trade here. Here, I put it on over here, and I was manually scooching up the stop loss, and it backed down and hit the stop loss and closed, with some profit there. Let's see. Let's go ahead and zoom out again and get a 10,000 foot look. Got some support. It's hitting support right now, so this might it might bounce back up again. It might not. Draw a line in the sand at this last low right here. And how many pips away are we from that? 63 pips. Let's zoom out again. Yeah, you got some more. So you got some major support right here. So it might be wise just to wait and see. No panic yet. I would like to get in into another position going north here if the cards have it play that way. We'll put another line in the sand right there. So there's my consolidation period right there. If it breaks north, we'll put a second position going north. If it breaks south, we'll put a hedge. And I'll determine at the time whether it's an equal hedge or if it's a we'll call it an unbalanced hedge, where I increase the lot size is increased over the original position. All right, NAS CAD. Look at that consolidation. These are nice breakout trades. When you see this, those of you guys that are using the breakout, or not the breakout, the DeMark subdem Indy, those who have purchased that, you put those breakout lines at the last high, last low, and take a long or take a short depending on how it breaks out. But it's going to go one way or the other when it breaks out of consolidation. And normally when it does break out consolidation, it goes with a vengeance. You can see right here, this period of consolidation right here. Look at that. It broke out and went down for 142 pips. But anyway, back to the task at hand here. It looks like we're just going to wait and see what this does. So let's go ahead and let's mark out our consolidation area there. If it goes south, I'm not going to worry about it. We're just going to let it get back to the original position and get in profit and take itself out. But if it breaks this consolidation going north, I will put a hedge on that one, as long as my margin lets me do that. All right, Euro Swiss. Looks like I had a line in the sand. I missed this one. Glad I did, because it's going back north. Let's zoom out. Well, looks like we have a lower high, lower high, lower high, a lower high right here. So if this pulls back and then turns around again, I could probably already deem this a trend reversal, and now this is going south. So the plan here, see how much this will go up, and once the Haas turns red again, as soon as that Haas signals red, I think I'll take a hedge position going south, and it will be an unbalanced one. I'll probably double up on the lot size on the hedge going south. So there you have it, the daily heat map. We've been doing this for a couple months now. Well, at least this one here since the 22nd of last month, so a month now for the daily heat map. And for the most part, it's done quite well on its own. Just hands off, one and done. Get your basket and go. But we have had a few times in the past couple of weeks now where we've had to put hands on and help it out a little bit. So again, the key here to being in that 10%, you want to be a 10%er, not a 90%er. If you remember what I said yesterday, 90% of the traders out there, they don't make very much. It's the 10% of the traders that make money, that make profit off of in the Forex market. So just trying to help you guys to get in and stay in that 10% bracket there. So continue to learn and be the trader. This completes our updates for the day. I'll see you guys tomorrow.